looks like it's connecting. It is. So we'll share the screen.
I'll let you
Yeah.
copy my trade so you don't have to make the same mistakes I did. 7.5 years. That's how long I've been trading for, and I've had many, many ups and downs. Have to make the same mistakes.
Right, if I turn it off now, it should be better.
Yeah,
I
that's
don't
it.
know
I'm
what,
on. Yeah,
I don't know.
I'm on YouTube now, Stephen. I can see it. Well, I
Yeah,
can see me
I'm
and you.
gonna make me a little bit smaller on there. Am I bottom left-hand corner now? Okay.
No, it's just two big pictures of you and me.
Right. So we should be
That's it. Now I'm top right hand corner.
right. So my even though I've told it to go bottom right-hand corner, we're there we go. So
That's it. You're on. You're top right hand corner.
yeah. I don't know why it keeps doing that. It just does. Hi guys. We'll get this on moving at the moment. Right. You'll see me looking off to the left because I'm looking at a different screen as well. So is the sound check, everything okay? You can hear me?
Yeah, all sounds good.
All right, okay.
Well, I'm listening on Zoom. That's the only thing.
Yeah, okay, it's okay. For people who are watching, there is me and one of the key traders, Andy Argent, on with me. And we'll let's get on and get moving. So we had the session started for 2:15, and that's my fault really. I published it everywhere for 2:15 and totally forgot the clocks have changed. So we were trying to come on for the Dow to close the gap trade, and you can see we've got a trade on just at the moment, 100 and something pips up, and we went in for a bit of a monster trade. Just take this trade off here. We don't need that anymore. So we've gone for a C-ball trade, going back down to C-ball, back going down to the close for 300 and odd pips, 118 pips up at the moment. And what we will be doing on the Dow to close the gap is we'll be looking at this bottom here to break. We'll put a bar on. What can we put a bar? We put a bar on here without with a number on it. I'm just using a new system at the moment, a new having to rejig PRT because I had some issues with it. But we're looking for a break there to add to the trade to close the gap here. So I've got 92 pips to close the gap. We use average true ranges to actually look at closing the gap, and we get the average true ranges from data that we actually save and look up every day. So this is what you can see here is we look at the 5-day average true range and we divide it by 30% and 15%. When we're going for the gaps, we're looking to get at least 30% ATR away from the close, from yesterday's cash close. So we're looking at 227 and we're 350 odd pips away from that at the moment. So we're looking for that to dive down. This is what you can see is a change from yesterday. The only market that was resilient yesterday was the FTSE. The rest have all come off in the percentages that you can actually see. So, round up this morning, we traded in the room, the gap was traded for 1%. We did fade to the fill for another 1%. We traded gold for another 2.28%. That took us up to 4.28%. Then we did Euro Japani for another 1%, then a 15-minute bar for another 1%. So we're 6% up on the day already, and we'll go back and we'll review what we actually did so you can see where we are. I've done a contrarian trade on the USD Japani as well. What I've also done is the people that are watching may have my AI reports, and between me and Andy, we've just run a brand new AI report for recommendations for this afternoon's live, and I've not even read it. We've just got it off the bot, the AI GPT. So I've got an AI bot that I've written. It's got Claude, DeepSeek, Grok 3, and GPT-4 as the back engine with a Python front end, and we just press the buttons and it analyzes the markets from over 50 different live sources every single day. I've issued the reports this morning to people, and at the moment, I've got the old report. Right, so this is the report that was published. Probably publish this every day in the room, and it tells you what are the top 3 to trade. And as you can see here, we tried crude and we got a smack in the face for 1%. We traded cable, which is good, Euro Japani, a couple of percent out of there. And then the short recommendations were all in for the American markets. And quite interestingly, it says the DAX is a short today. I'm expecting the DAX to go long, but yes, the Dow short, and yes, the S&P. And it gives a bit of research data, key points on why. It gives a market sentiment analysis here of what's happening and alternatives to think about. It gives the Forex pairs, the major Forex pairs, with a quick look-see on what they're doing. It gives some considerations, and it gives me a citation of all the different websites it's checked, all the different sources there it's checked to give a deliberation on what's going on. So what I've actually done for this trading session is, this is raw data, and I've not read it. I don't know if you have, Andy, yet, but this is raw data, and what I said to it is, give me your buy and I've not copied. Have I copied this correctly? Have I pasted this correctly? I'm just gonna have a look.
It's not the normal one, Steve.
No, let's just have a look at GPT. Have I, in my haste, I think I've only copied some of it. Bear with me 1 minute. We'll just have a little look. GPT, pulling all the data up. Come on, come on, come on. History.
Alert triggered.
Show me what you've done. Financial trade setup.
Alert triggered. Alert triggered.
Market focus, risk. No, it's gone by recommendations. Bear with me 1 minute on my. It might be faster rather than me typing. It might be faster for me to ask. Bear with me 1 minute. Hi, Sophie.
Hi, Stephen. What can I do for you?
Alert triggered.
Hi, well, I've just done a request for a market analysis using one of my GPTs. Can you see that I've actually done that on the GPT-4?
Yes, I can see that you requested a market analysis for Euro JPY and FTSE 100. How else can I assist you?
Ah, right, it's come back up. No, that's absolutely fine. Thanks, Sophie. Bye-bye.
Take care.
Cheers. Sorry, guys, that's my AI assistant. And it's just flicked it up again for me. So actually, this is correct without the preamble. No, actually, it isn't. So I'll get rid of that. I'll open up Word, and I'll do this live now, and I'll paste it off. So we're using quite a lot of AI technology in the trading room now as assistants to help us with market direction. It helps me have a look at around about 60 different websites simultaneously. It gives me analysis to then do my view on the world from a technical point of view. So I'm just going to have a little look at what this data dump is that it's done for me. Copy, and I'll just put this in now raw, and we'll have a little look at this together. Right. No, it's saying exactly the same thing. All right, it's broken it up on the formatting. So we'll have a look at that in a minute. So we'll just quickly look at the Dow. So not quickly, we'll look at the Dow. So we're already sat on a very big number. How much have we made today? Probably 7-8% on the market, and I've been hammering gold, so we've done really well. Rather than go into the American market right at this second, we'll do a quick preview of what we've done. So I'm just going to save this view, and I'm going to put an alert down here, because as soon as we break the daily pivot, we're looking at closing this cash gap, which does need to be closed. We're coming at it, we're over 100 pips up at the moment, but we'll leave that just for the moment and go into Forex and gold. So this morning the AI report said we should be looking for a move up on Euro Japani. So we were looking for that move up on Euro Japani, get into the 15-minute. So we were using 15-minute trades, and we took this bar here, a 15-minute bar trade up for a 1-to-1 risk reward. I then said to the room in the morning that we're going to get a bit of a reversal off the Euro Japani on this soft tissue here. So you can see here in the markets had multiple rejection points in this area. So what we like to try and do is use our fundamental data, and we'll overlay it with our AI technology and our AI screeners, and a technical view as well, to give us the best possible chance of making some money out of the markets. So we first of all took the money out of the market. The original trade was in here, going all the way to the target that we set at 6 o'clock this morning. And because we'd earned so much money in other areas in the market, we decided just to bag our 1% here and look for another trade into here. So the market came up and duly pulled back. So once it duly pulled back, we go into the smaller detail, which is this break here. And if I put the fractals on, show fractals, and move it into a bar count of 1, closing price 1. And you can see here, we had a fractal breakaway here. So we took a fractal breakaway into the target, and that hit again. Now, there is no reason at all, markets need to breathe, that this market will not hit that target again today. So one thing we need to do, knowing we're looking at a bit of a pullback, so one of the things we'll quickly do here is we'll run a Fibo on the last base. So it's hard to find a base on the 15-minute. Is the one, unfortunately, it's a little bit messy at the moment. We'll just do a quick Fibo on here and have a look at where the 50% retrace level is, because that level should be easily on a big pullback here, should be easily achieved. An aggressive pullback and reversal will come off the 38.2. So we just need to be aware of the 38.2 as well. And I'll just mark that up there. I'll mark it up here. We'll take that off. So what we always do just talking through how flipping heck. Come off that. I was wanting to take the cash on another trade that we're doing, and it's reversing, which is a pin and a bum. But it's coming back up, so it's going to take the cash and not bother about that. I was doing a contrarian trade on a bounce off this resistance line here, and while I was talking, we were really up nice, but can't complain about taking money off the table. But this afternoon's more of let's have a look and let's have a considered view on some trading. We've already ripped the money out the market in the morning, so let's just see what we can do. So going back to where we were, which was Euro Japanese, wasn't it? Euro Japanese yen. So what we're looking for here is the market to pull back into an area where it's been before. So let's just clear all this up. And these are the 38.2 38.2 Fibo reversals. So you can see here this is on the 2 minutes. Let's pull it back out again onto the 5 minute. What I'm looking for here is you can see what markets breathe. They go up, impulsive waves, and then they come back down again, up and down, up and down, and then the market really took off. What I'm looking for here is a stopping point that the market's been to before. So we've got a fractal breakaway here, and then a pullback into the top of that fractal breakaway there. So if I just identify that fractal and identify that pin there, the markets will gravitate round to these areas naturally. What I'm wanting to do this afternoon, if we can, is we want to go give this a tap again for another trade. But there's two things that we can do. We can use a fractal on 5 minutes aggressively, but the fractal's up here at the moment. Or we could have a look to see if we can get a 15-minute bar. Now, there's a great setup for a 15-minute bar reversal here because a few of you might have downloaded already the guide that we use as belts and braces. But this all stems from something we call the 415 reversal. We look at a 4-hour direction and we use a 15-minute snapback back in the direction of the 200 EMA on the 4-hour. But while you're learning some of these strategies, and also to give people discipline and getting into a market, if we can get some duck alignment on 4-hour, on 1 hour, and 15 minutes, you're going to give yourself the best chance of a really nice entry. Doesn't mean you're going to win, because that's all dependent on what strategy you use. But you can see here, we've got a 4-hour 200 EMA here. There. That's a 4-hour 200 EMA there. So we're trading above that. We've got the 200 EMA here again on the 1 hour. You can see how the markets are stacking up with regards of exponential moving averages. And you drop it down into 15 minutes again. And then you can see here you've got the 200 EMA there. One thing you want to look at, a little tip, is when you see these EMAs, if the 4-hour is your base, you've got the 1 hour, which is a certain distance away from the base of the 4-hour here. So you've got the distance from here to here. One thing you want to measure is from the 1 hour to the 15 minutes, if that distance between here and here is greater than the 4 hours of the one, that's telling you that the momentum is in fact increasing on the positive side. Now, if the 200 EMA was down here, then you're probably looking for the market to be starting to be a little bit toppy, because the EMAs are coming down collectively and converging. So one of the things you want to be cognizant of is if you're going to trade Euro Japani, as this example, this live example that we're running, then looking at how this market is running with the EMAs, it's telling you the market's getting progressively more aggressive, which is great. But you can see potential flattening here. But that's represented by the market pulling down, as you can quite clearly see here. The market is pulling down, and it's below a key EMA we use in conjunction with a 15-minute bar and in conjunction with a fractal. If the market, regardless of the market's positive, and we know this market is positive because we're trading above the 4-hour, the 1-hour, and the 15-minute EMA, we know the momentum's positive, but the price action is negative. The reason we know the price action is negative and we should not be trading is because it's trading under the 9 EMA. So, and again, the 9 EMA is always your friend. When you are trading, for instance, let's say this morning we hadn't made any money on the FTSE and we didn't make any money on the gold and life wasn't so hot, and we did this trade. What you can do is, rather than have your nerves and your consciousness with your right finger clicking, trying to
triggered,
trying to make profit, is use your 9 EMA as your conscience, and you stay in this market until the 9 EMA is broken and the market actually closes under the 9 EMA. So you can see here, let's get rid of this bar so it's not confusing. The 9 EMA here was actually not broken on this bar. Actually, the market was broken that bar. You can see here that that candle actually closed under the 9 EMA. On that close of the 9 EMA, you would close the trade. Wicks do not count. Wicks are just movements within that time frame. If the market closes in the 9 EMA, then that's your opportunity to get out. So if you're in here, you took a 30 pip risk and you then run it until the market confirmed and closed here, and you got
trigger
73 there, so you got over 2% trade. If you'd use that, there's alerts going off in the background here. It's whether you can hear it or not, I'm not sure. But we've got Euro Japani as well, just saying, remember, we're looking at Euro Japani now, so that's not an issue. So it's coming down to this area here that we said it would probably come down to on an aggressive move. So, yeah, this is an area that if the market is very aggressive, then we expect the market to bottom around here and then provide us with a 15-minute bar. Now, can we spot one? So, a bit of scrappy action. It's no good picking the perfect storm because that's easy. Perfect storm coming down, 15-minute bar here, boom, and you are off. But that's great. It's okay if you're in sitting up late in America, or if you're in Asia Pacific markets, Australia, then there's a great trade there. Even better trade when it gets above the 9 EMA and the 200 EMA there. Absolute no-brainer, easy money. But we're going to do this live to show you not how easy it is, but to show you a technique. And it has to be rules-based because it just works. It's not going to work all the time, but it works very, it works really well. So you've got scrappy action here. We've got, we're under the 200 EMA here, but if you're looking at the 415 reversal, which is a trade we use in our room quite regularly, we are very positive on the market. So we're looking for the market to break above the 9 EMA to get a trade on. That broken 9 EMA, give us a fractal, which never happened, so we're safe. That gives us another break here, but it's a very small bar. If you look at this, it's a very, very small bar. But it did break, so that is a potential there. If you're aggressive in the market on this one and you liked that particular bar which is there, then your stop is under there, and that's your 1-to-1. And then you're in until the market tells you you're out. You're out. You either go for a double top, a double tap here, which is there. Here, you can see how often markets repeat themselves all the time because it's humans behind it that are pressing the buttons. And if it's bots, it's humans that are coding the bots. So humans are habitual. They all look at the same thing, and they all react very much in the same way, taking profits, market coming back, market breathing. So here you could have gone in here and you could have moved on, moved on, moved on, and moved on. Two opportunities for taking profits, which is double tap reversal from here, there. So you'd have took your money into here, or you would have waited for the market to break the 9 EMA with the candle, which is there. Either way, you'd have got your one-to-one, of course, because your one-to-one was, you're talking about 21 pips there, or 36 there, so 1.5% there, or a 3% trade there. Nice if you can get these things. But you can, if you are patient and you work on the rules. Not following the rules is the way you lose money. If I can get rid of that, that would be great. Let's go back to Euro Japanese. So what we're going to do, we're going to trade this today, and we're going to, hopefully, we're going to make some money out of it. So I'm going to choose a 15-minute bar reversal technique. So what I'm going to do is not sit and watch this. I'm going to put two alerts. I'm going to put an alert up here, and I'm going to put an alert down here, which I think was the 50% reversal. Well, I'll just have a quick check. Put that fib all back on. Yeah, that's a 50% reversal. Just put a line in here, and we'll get rid of that and change this. It's not a 50% fib or 61% fib, it's a 50% retrace, not a fib. We'll stick that in, and we'll keep an eye on that. In fact, what we'll do, we'll stick an alert on the 50%. So alert, whack, we'll put an alert. You can see with the ding dong, the bell there. Sorry, ding dong bell. So we've got a 50% retrace level here. This is a 38% retrace level. On the stocks, we look at the market still falling away. These are all the things you need to look out for. They're all bits of data that help inform you as a trader what you should be doing. We have some rules on the bars and how we should trade the bars. And as long as we keep our rules correctly, we will get into a potential nice trade. So where we are at the moment, we've got the market 60 pips in the pocket, which is easily achievable. 15-minute bar reversal, we're going to need a 29 pip move. This is the average true range over 5 days. So if we're day trading, standard settings, people use a 14-day ATR. I don't use those. We've found them not to be fantastic for intraday. 5-day average true ranges are great. If you're using 15-minute bar, we want to look at roughly where our ATR stop is, average true range. Around about 30 pips we're looking for here. At the moment, you can see the on-balance volume on a 15-minute. It's clearly down, so there's nothing to see here at all. We need alerts to go off for us to get interested. Let's just go back to that Dow and see what's happening with that Dow. And then we'll look at our AI report. So markets still fluctuating. This is Camarilla breakout long. And what we were looking to do is to put a very small amount of money into the CAM trade here. But for me on this trade, we are negative. The reason that we're negative on here, we've had the Michigan Consumer Sentiment Report that's been out, and it was expected to just be a little bit shallow, but rather was it 64.7, the consensus from the last time. The consensus is it dropped to 63, and it coming at 57. Well, when the number goes down, when you get a low reading, it's bearish. So it's bearish for the US dollar. Bearish for the US dollar would mean the US dollar is going to be a little bit cheaper to buy, and therefore better to buy foreign investments into the Dow, so the S&P and the Nasdaq. So we do expect this to have a little run up. However, technically, and from our good old friend Trump with his 200% threatens on tariffs, really in retaliation for the American whiskey escalation tariff from EU to America of 50% on American whiskey. Trump's now rattling the saber and putting a 200% tariff potentially on Europe. But also, he's already hit the UK recently, the past 48 hours, with a 25% tariff on steel as well. He's already hit the Commonwealth on Canada with 25% already there. So, but he's not doing the American markets like steady state information, and it's just not. So people are really trading with the feet and the selling American markets. We should get a move up with the consumer index, but when people realize the state of economy, even with Ukraine going to ceasefire, even with oil potentially going up a little bit because of America coming in with getting a mineral deal, potentially infrastructure deals, everyone's switching off to start rebuilding not only Ukraine but potentially Gaza and the rest. A lot of energy is going to be required, and tools going to be required. It's going to put a pressure on oil to go up as well. And we'll have a little look at oil. But so what we're looking at ideally for me was the market to come up into this area, this zone up here, and try and sell it. We cannot ignore a C-ball trade. This is a Camarilla breakout long indication that we use, which is a Camarilla R4. And generally, if the markets are negative, which the Dow is as a 200 EMA, absolutely screaming negative here. We expect the markets just to have a momentarily move up into here, but we've taken a very small amount into that. And what we're really looking for is to short this market higher up. So we're going to the 1 hour now. Just looking at I want to use, apologies to the guys that are trading. Hi, Pep. Hi, Paul. Sorry, I'm just looking at who's on YouTube. What we're looking for here is the market to fail into this technical area here. Yesterday's daily high. So these cam trades, explanation, whilst we are trading on the trend, and just these alerts are coming off as well. I'm trying to trade multiple markets all at once, like we do every day in the markets. And I have all these indications here telling me, I'm just going to stick that onto a different page. So that's flashing away so I can see what's going on. Hi, guys. So if anyone's got any questions as well, I'll keep an eye on that box. Ask the questions, and I'll do my best to answer any questions or clarifications when we're going. So this is Camarilla breakout long, an R4 indication. So let's see, this is just a wee piece of code here that's not difficult. Put a bit of code up there, and that just calculates all the different things. You can get that on my website if you want it. If you don't have it, it only works on Pro Real Time. So if you're not using Pro Real Time, then it's of no real use. I suppose I could convert it for for TradingView, but most of our traders are using Pro Real Time. So what we're looking for, what I would really like to see, is for this market to fail into this resistance area here. You can see we've not really had any real big breakouts of that, and I'm hoping that the market will push up a wee bit, but hopefully fail and come all the way down to here. We tried trading this gap today, and we traded that. Where's the close? The close is at 48.13, the cash close. So we made some rupees coming down, but then the pivot boys, and there's a lot of people that trade the daily pivots here, bought the pivot up, and the market came up. So we took the money from we were trading up here. We took this money, and then went back in the market again on a tick out of here, and we give all the money back. So we're neutral on the Dow at the moment. So what I'd said in the live room is, let's just see if we can buy Camarilla breakout long, sell Camarilla breakout long for a longer term trade. Now there is a trade that we do called the CAM trade. If I can pull up the ATR again on the CAM trade, and it's a 15% ATR trade on the CAM. So today the Dow would be 113 pips. So what we would do is we'd look to sell Camarilla breakout long with 113 pip stop, which would be up here, and then 113 pip target, which would be here, there. That is a system trade, and I'll go back onto the FTSE and I'll show you what we did in the FTSE. Doing that, we did that yesterday and we did it today, and we made money. Again, if we'd done this live, and I'm apologies that we're an hour late. I just made a mess up with the market timing today. So as the market came up, we'd sell that for 113 stop, 113 pip target. But again, that's hindsight trading, but it is trades that we actually do. When I was talking earlier, I'd said, let's put a wide stop in here on the CAM, because we're not going to go for 113 pips. We're going to go for over 300 on this. So let's give it a wider stop. So that is a trade that we did not do. It would have worked, and I'll show you how we manage that on the FTSE in a minute. So CAM trades, very useful. If the market's negative, we look to hammer an attempt of a breakaway. Trade number of Camarilla breakout long is a breakaway trade into negative territory. Ideally, we will, two things really. Ideally, we will trade up into this level here, this resistance level here, and the market will short round about 41,300 and above there. And we'll get a short on there with more leverage, and then we'll run that down into the close. That's what the perfect storm will be. And I'm going to have an alert up here to see if we can get alerted up for that. Just have a quick look. I've got multiple screens. No one's asked any questions, so that's okay. It's getting very dark in here. We had a tornado. Yes. Did you have a tornado, Andy, yesterday?
No, but we have had a lot of wind. It's been really, really windy. It started blowing up again now. So, yeah, the weather's a little bit fickle at the moment. 1 minute it's lovely and sunny. Next minute it's a little bit treacherous.
Well, I had some chairs up on the veranda, and the wind come and ripped all the cushions off the chairs, threw them about 20, 30 meters to the garage, and they landed on the garage.
Well, no, I've not had anything like that.
Absolutely mad. And then this afternoon, it was 30 degrees in the sun, and now my room's gone black in here because it looks like we're up for another storm.
Yeah. No, it's pretty windy, but we've got sunny spells, but pretty windy.
Yeah, right, okay. Sorry, that's our Spanish weather report.
Yeah, we best tell them that one of us is up in Murcia and the other's down in Mahaka.
Yeah. So, right, let's have a look at the other markets. So let's just have a look. I'm looking to sell the Dow. I'm looking to sell the S&P today. Right, okay, I'm telling you what I want to do. I've not looked at the AI report. So one of the things I was wanting to do is to sell above Camarilla breakout long. So let's have a look. We've got a closing gap here, a cash gap in the market. That needs to be closed today. We've got the Michigan consumer sentiment out, which is a sentiment that people will lose faith in, I think. And we are just being patient, and we're going to set up and we're going to rip some rupees out of the market. We have to be patient waiting for this to happen. So we did have a descending 4-hour channel here. And you can see we've got the market. We've now gone into full correction mode of the S&P. We certainly are trading under there. So this is the official correction under 10%. As far as I'm concerned, we break. So here's another tip. On 4-hour, very powerful indication, good for swing traders, a great indication for a day trader is what I'm about to tell you. For the intraday trader and swing trader, when you get a 9 EMA, not your 50s, not your 20s, your 9 exponential moving average, when that plunges through the 200 EMA, game on. Market has gone negative. Don't care. I've been trading this market for a lot of years. Don't listen to all the pundits. This is tried and trusted. You go back out of this room. You put the 200 EMA up. You put the 9 EMA up. You go back. You back test it. You have a look. Every time that crosses, and you'll find out what happens to the market. It is a really good intraday trading tip. So that's on the 4-hour. For me, market went negative here. Not today, not yesterday when it went intra, not intra, you know what I mean. When it went, I've lost my flipping words now. When it went negative. 1 hour. So where did the 1 hour go? Well, here's the 1 hour. There we are. So the 1 hour, that is what I will use on as a day trader, as long as this is under the 200 EMA. And where is the 200 EMA? There's the 200 EMA for the 4-hour. So indicating a break on the 4-hour was here, and on the 1 hour, if I'm a day trader and that broke, game on. I'm going to short the backside of this using fractals or 15-minute bar reversals, and of course, none of them lost. You don't have to be a rocket scientist to see what happened there. So we had that break here. We've got the 200 EMA now. So let's draw these up again like we did with the Euro Japani. Again, Euro Japani, there we go. It's a 200 EMA there. And we've got nowhere near it. Now we're getting into the detail in this 4-hour channel. Let's jump right into it now with the pivots that we know. We've had a closing gap on the 11th of March. That's a cash gap that has not been traded. That's effectively a hole in the market. So now you can see the 200 EMA here. Now, a belts and braces trade would be to let the market run up here and put an order in under C-ball. I can take this off now. Put an order in under C-ball, under the 200 EMA there, and you'd go for that close. 2 ways you can do this. This is just a support resistance trade using the EMAs. 49 pips there. Do you need 49 pips as a stop? Well, not really. You wouldn't need that much of a stop, because we're taking a break back into the channel, back under 200 EMA and under C-ball. So the way we would look to trade that is we want to know what the average true range would be. In other words, what would be the average movement if the market was to then do an impulsive move back up? So to do that, we refer back to our tables again. and the tables would be our S&P average true range. So that'd be 17.5 pips. So we'd be looking at really trying to trade this as 18 pip stop. So what you would do, you could even do this now, put an order in now with a break under C-ball with an 18 pip stop. So the ATR is 18, give it a bit of wriggle room. You could round that up to, let's say 20 pips. And then you would look for a 20 pip stop and you'd be coming down for nearly a 2%. In fact, we're going to do that now. We're going to have a long of 48 to close the gap with a 20 pip stop. And we're going to put 1% into that. And we're going to just bring that under Camarilla breakout long under here, make sure that's correct. And we're going to put that order in now. And what we're looking for is the market to drop back into the channel, back under the cam. Doesn't mean to say we won't want to trade this higher up. The market has got a magnet to actually close that gap. Now, what we can do here is there's a belts and braces trade under here, of course. But what we can do to the market, if and when the market does come up to close this gap, we can do one of two things. We can wait for a 5-minute bar reversal under the 9 EMA, and I'll show what that looks like in a minute. Or we can use a 15-minute bar reversal. Or you can just wait for this to happen. And a few different things. By way of an example, we'll look at structure, actually 13th. I'm just looking at the 13th here. Up at midnight. On the 12th, I'm sorry, that gap has already been closed. So that was the gap on that gap got hit on the next day. So sorry about that. I haven't closed that off. So what we can have a look at here, we'll have a look at where the market may well stop. Let's just zoom out a little bit and show you how we would look to trade this. You can see the market coming into areas now where we might stop. We've got this trade on for over 2%, 2.5%. So that would be quite nice. So we're just going to have a look. We've got some pins here. We'll always take 3 pins as a potential resistance area. The reason we've got
Alert triggered.
right, so we've got an alert triggered again, and where's that alert triggered? That's just stopped me in my tracks talking. So what we're doing in this, can I put this light on? Hang on a second. We've got, bear with me 1 minute. I'll see if I can go and put a light on. We've got thunder outside at the moment, and let's get some light on the job. Right. We're in for a big storm, I think. Right. Yeah, it's looking very black outside. So let's have a quick look at what those alerts are. Weather's worse in Spain than it is in England at the moment, I think. So we've got a Wall Street trigger at the top end to actually look for a short. So I won't stay on this too long, and we'll look to get that short on in a minute. So we're coming up to an area here that the market could well reverse into, and 56, 50, 56, 43 area would be my, it's absolutely hammering down and thundering outside at the moment here now. Absolutely banging it down. Got people with the cameras taking photographs of the people who live here, not used to seeing all the flipping rain and thunder and the bad weather, taking videos of it all on the ground.
It'll be a power cut next, Steve. Typical Spain, yeah. It'll be a power cut.
That's the next thing, isn't it? Leave all the power go off. That's all we need. So we're looking for my area of interest. So here would be a great place to put a short in, but we need I would say the stops need to be above R3. which is a great resistance area here. So we'd have to have our stops, which aren't big stops. We'd have to have, let's say, 40 pips stop, and we're going back down to the close, and we're going for over 2% again. So I'm, you know, after making all the money this morning, quite relaxed about this. I'm just going to tap here with a potential for getting a reversal in there on that that market, and this will pull the UK markets down as well. So let's just save that view for the moment. I'll just stay away from the Nasdaq at the moment. We're looking at too many things at once, and it won't be helpful for people watching me flick all over the place. So Dow. So we've got 0.25% of risk on the Dow at the moment. So this is really nice area to come into. So two things I want to do. I want to build into a trade here with a 240 pip stop, and we're going to use 0.5%. Now it's support resistance trade. Smash the button now, guys, if you're going to trade with me. The guys in the room, Andy as well, we're going to smack on that one there. So we've got 0.25% put in there now, with a stop out of the way above a big round number, which is 41,500. The market should get a resistance off that, and we're going to run this all the way back down to the close, ready for tonight. So we're doing nearly 500 pips there. So what we want to see now so we've got 0.5% at risk at the moment, and we're going to build into this to short the Watsits. I'm just going to very quickly flick over to BTC. I'm going to take out the BTC, because this is going to drag them out. We're 500 pips up there. It's going to take that money, so I don't any risk on BTC. So we'll just take the profit out of BTC. And let's focus on, oh gosh, that was lightning. Hopefully the power, it's Tin Town power out in Spain at the moment. So what we're going to do here is a 15-minute bar reversal, or a 5-minute under the 9 EMA. So I said to you I was going to show you that on the S&P. I'll show you that on the S&P now. I'm just going to alert this a little bit further down. Here we go. Alert further down here. I want to see the market coming off. And I'll show you what I started to talk about with when the market's coming to a resistance area. So for instance, here on the 15-minute, two things you can do, because the markets do repeat themselves. We can take, I don't know if you can hear that in the background, can you? And I've got my noise cancelling software, but it's absolutely raging, the rain and the thunder at the moment. We're looking at a 15-minute bar reversal. So there's a raw 15-minute bar there on a 1-to-1, which would have been pretty good. 15-minute bar break under the 9 EMA would give you that confidence that the market had started to move off, and give you the comfort that we're breaking the 9 EMA completely with the close. And that would, obviously, of course, give you a 1-to-1 much better. Another tip, when you're looking at these things on these 1-to-1s, ideally you want to get a 1-to-1 under the previous low. You've got to have the headroom to get a 1-to-1 in. That's a really good tip to do. It's in the beginner's strategy for the 415 reversal. So that's always a good thing to do. So let's look at the time here. We can then go into 5 minutes. There's a 15-minute bar reversal there, or I can show you the 5-minute. So let's go and have a look at the 5-minute bar, which closes under the 9 EMA. So you're coming up to the market area of resistance, and then there's your 5-minute bar there closing. There's a better 5-minute bar, even a better 5-minute bar. Doesn't matter which one you took, we all made money. But we want to do this live, because you get loads of trolls on YouTube saying, "No, it's okay, it's anyone can do this after the fact." But And that's quite true. Anyone can do it after the fact. We do it live every day. So I want to prove to you live every day. This is this is how we would do this. So this is our belts and braces trade. But we also want to have a look to see if the market will falter like it has done before here. So we're going to put an alert down there, an alert here, to see if it can falter. So there's an alert there. Now, and we put an alert, got an alert higher up, so we're trapping the price. No matter what happens, we will get something going off. Keep an eye on the unbalanced volume, and it gives you a heads-up idea of what traders are doing. You can see here that unbalanced volume is starting to come down, which will manifest itself in the small tickers coming off. There you go, small tickers coming off, as people have been trading this up. And no matter what you look at in the marketplace, you will always get people buying the S&P. Don't know why, but people just keep buying the S&P regardless of whether it's negative or not. But that's a good thing as well if you can make money. But people have took profits into there, but it's been bought up even further. But we're not interested in this just yet. We're not going to go up against the trend. We're going to wait for this trend to fizzle, and then we're going to hammer it on the way down. Okay, so we've got the S&P trapped. I've got the Dow trapped. I want to have a run out to gold because I want to trade gold. Gold's my favorite one today. And we had a gold for the week at 3,000. We blew it out the water this morning, and we aggressively traded this out of the trap in the morning, all the way up through to 3,000, multiple trades using 15-minute bar techniques, using 5-minute frackers, and done really, really well. What I'd said is we want the market to pull back from, that was where I drew the arrow. I knew there was a bit of an arrow drawing going on here, and this was the area I wanted the market to come back down to. And the market's come down to the area that we were after to then go back for the 3,000 again today. I think it will attack that level again today. These are all the targets that we have been going for this week, and we've hit all our targets, and we've done exceptionally well out of gold. I think made 13% on the bots and manual trading on gold today alone. I've turned the robots off at the moment, I think. Yeah, the robots are off. Yeah. The bots have been switched off. So I'm going to, I don't need to put the robots back on. I don't know whether I'm going to put them on or not. We'll have a look at that in a minute. So let's just have a look at the peak to peak reversal on here. Where would this, if this is going to rattle on a little bit more today, I'm not sure it's going to. We might just get a double tap. But look from here. On the larger picture. Right, dropping back down into this target area, which I'm going to delete. I thought I deleted that. And there's a Fibbo extension. These are all the things that we have been trading. And you can see here the market moving up. It hit the Fibbo on the nose. There's an awful lot of Fibonacci traders on the gold. So much so, you can really put your Fibbos in as targets. And to a reasonable extent, if there's no economic news, walk away. You know the markets will go for the Fibbos. So you can see where we are here. This is not a true Fibonacci run because we've got breaks in structure. So let's just go and have a look at the true Fibbo using the tool correctly. We want a nice smooth run. So the last smooth run is from this point here to the high test there. So if we do a Fibbo on that, so a 23% retrace would be a very aggressive market to bounce off to. a bounce off from, I should say. I'll just put a little marker in there just to show you, and then it's always a good idea to mark all these levels up on a multi-time frame. And as you drill down into the time frames, you can get some correlation, multi-correlation overlaps, and that's exactly what you want to be looking for. So on the 4 hour, we can't do a Fibbo extension because we've got no base yet. On the 1 hour, can we do a Fibbo extension? Well, it's not fantastic. It's a double tap here, but we can look at that. We'll look at that now on a detail. Pull that into some detail here. So let's just get rid of this because this was a 23% Fibbo here. Let's now, we know this is an area of interest. Let's try and ignore the price pattern here. And we're going to look at, and this is the stuff you need to be doing as a trader, and you need to be doing all the time, marking up at least three points. We only use Heikin Ashi here. So we use Heikin Ashi points at all times. So this is the area I'd specified this morning from earlier analysis. I'll get rid of that. The market has come down to there. So the market now has come down again and just pushed through. What you might find here is that people have gone long here and put stops under here. That is the nightmare place to put a stop. Where you put your stops generally will be where the rest of the big players will put their buy orders in. So don't put tight stops on gold. Never put tight stops on gold when the market is very toppy. You're just looking to throw your money away. So you can see we're topped out on the 4 hour stretch, but that's okay because we can stay up there for quite a long time. This all-time record high is being blown today. So that's absolutely gone. We've got a new all-time record high. I have a target myself on the gold to be somewhere between 3,150 and 3,200 by the end of the year. I think it can extend quite a bit further than it has with all the problems that we've got. And looking at what we've done now, technically, that's where it says the market is going to run to. The first big rejection is at 3,090. The psychological 3,000, the market will push for. I said this morning, all the markets are saying, no, it's too toppy, too toppy. Don't believe what all the analysts and market consensus says about being toppy. When you've got a big round number, a BRN, you got the freight train running, the super tanker. Do not get in the way of a market that's on a mission, pushing up, especially towards a BRN. Everyone knows the market's coming towards a BRN. It's self-fulfilling. Do not get in the way of a super tanker trying to short it. You'll lose your shirt. So, having said all that, it's quite interesting. We've got no one arguing in the chat. So I want to go along on this again. Two ways. I'm just looking at this structure here where we're at all time frames, 4 hour, 1 hour, and 15-minute. We are obviously screaming along still. It's just on a little bit of a pullback. Is this going to hold? It might do, it might not. We don't know. What we do know is up all the way down to here, which is a 50% retrace level. We've got a great opportunity to take a 15-minute bar reversal. If you want to take a fractal reversal off this level, you'd want to do that onto a 5-minute structure. So it's the last time it come down a 5-minute structure. And one thing we determined this morning is when we use our fractal tool, if we put this into a 4 count, we can use this fractal as a nice bottom to get in and to get out. It would have been really good. I think because we've hit the BRN already, big round number, I'd be quite happy to be super aggressive now with a fractal, because we were cautious going to 3,000 this morning, and now we've hit it. We can be quite energetic going up. So a few things here. 200 EMA is very close to the fractal breakout there. Really, really nice. And ideally, once we get towards this level, then you're going to see the bars closing above the 9 EMA. So the perfect storm to do a trade would be a 5-minute fracker, which is above the 200 EMA. So you'd 5-minute fractal here, but you would trade above put your order in above the 200 EMA. And also you'd want to see a bar above the 9 EMA. So you've got all the confirmation in a 5-minute time frame, everything's setting up collectively, momentum, 200 EMA, fractal breakout, great. Price action confirmed, and you're away. And if we can get that, that will be perfect. And you're only looking at 8 pips, and you're looking for a double tap back up into an easy 2.5% if that sets up. That should be a absolute blinder of a trade. The other one to do would be a 15-minute bar. If this level holds, 15-minute bar reversal. So if we go down here again, I can zoom this out a little bit better. Yeah. Market come off, 15-minute bar reversal. Kind of nice candle, but a little blip at the bottom. If you look at the 15-minute guide, that is not a fantastic candle. Can I pull up that 15-minute guide? Bear with me a minute. Let's just have a wee look. Pull this, my view, on these roller recordings, 15-minute bar, trailing recording. It was the strategy, one at Q1 strategies, 15-minute bar reversal, 15-minute guide. There we are. So just to show you the candles. Coming down, these are all the setups. So here we are. So these are the candles you want to look for. Let's put this to one side so we can see that clearly. Can see that clearly there. So this is the perfect candle entry. This is the second best. We don't have a third best, but what we do have is if you see a wick to the upside and to the downside, regardless if it breaks the 9 EMA, it's an indecision candle. That's all we need to know. It's indecision. You can call it a door, you can call it anything you want. In Heikin Ashi, it's either a positive candle, negative candle, or indecision. Nothing else. People make names up. This is Heikin Ashi candles, not normal candles. So you can see here, got that little pip at the bottom. Wick, this wick is slightly bigger than the body. So that isn't the actual perfect scenario. This one, flat bottom, and the market breaking here, it looks like it's being copied. That is your perfect storm candle. And that's what you could look for today. So that's your perfect storm candle there with your stop there. Boom, straight back into 3,000 on a 1-to-1. Wouldn't need a stop that big. The spread is 0.3 of the pip. You don't need half a pip in there, and you would have made some money in there, no problem at all. So 15-minute bar off here. If the market comes down further, a 15-minute bar off here, or a 5-minute fractal, making sure you're above the 200 EMA and the 9 EMA. So there are different scenarios and tools that strategies that we want to use here. Okay, let's just go and have a quick look at with alarm gold up. There we are, an alert to the bottom as well. We track that price. So if it shouts at us, we can come back and have a look at it. But we just need to go back and have let's go and have a look at Euro Japan. So Euro Japan still not made its mind up yet on what it wants to do. We're going to go along a 15-minute bar reversal on that. We've got some indecision candles, not quite ready. Dow. So we've got 0.5% at risk here at the moment. And we're now in my zone where I want it to be, and I want to short this. So we've got the price again alerted off if it comes back down, and we're going to jump all over that one. So we're just waiting for that. Just got to be patient. You can sweat and make 0.5%, 1% going up, or you can be patient and smash the market out the ballpark with a good 2% plus trade. So that's what we want to do. So again, we've tracked the price at the moment here. We've got unbalanced volume. Markets are still trying to buy. You can see the market tried a reversal here, but nothing happened. It pulled back off on the 2:30 when we opened. So we're still looking for our drop trade here. We're still looking for over 2.5% here. But if we can get a trade higher up, then this will just add on the way down. In other words, a confirmation on the Camarilla breakout line. So we could look at trading higher up down to CAM. If it breaks the CAM, then we'll finish it off with a closing gap trade. So we've got two closing gaps to try and get into. So one thing I haven't done is look at what that AI tool did. So I'm trying to find it now. We dumped all the data in. So there's the data that we dumped in live. So for this afternoon, we asked it to give us all the information from 6 a.m. this morning. So some of the data will be out of date as far as numbers are concerned. But what we're looking at is this is market, microeconomic, market sentiment, and technical data that as a trader we can make sense of.
Triggered.
Flipping heck, I've just put this up. Just have a look at what that alert is. Just
Triggered.
1 minute. Don't want to miss anything.
Alert triggered.
Euro Japan. So that's our Euro Japan wanting to go back long. Bugger. Excuse my French. Let's put that on a different screen. I'll just wipe that across, and I've got a few screens in front of me. Let's have a quick look. It says gold going long, cable going long. This is for this afternoon, an updated one. NASDAQ going long. So that's what I mentioned before, a bit of a relief rally. So that's nice. Short recommendations down. Well, I've said down already. DAX. Now that's interesting because the DAX normally does rally up on a Friday. So, yeah. All right, it's mentioned the stuff that I talked about before about the 50% tax on whiskey and the Trump with the 200% tariffs. These AI tools are fantastic. It enables me to read 50, 60 websites instantaneously, and I can make some decisions about what to trade based on the public information. Anyone can do this if you know a little bit about AI and Python. Anyone can do this. So data sources here. So yeah. So Euro USD is a short as well. Interesting. And what else? Anything else? So for this afternoon, it is saying we should be looking at gold. And yes, we are. Looking at cable. We have a cable trade on still from this morning. Going long. NASDAQ. We've not looked at the NASDAQ yet. A short, the Dow. Doesn't mention the S&P. Probably because we requested this after the Michigan consumer sentiment report, so it's disregarded that and people buying the S&P. But good. Yep. Okay. Let's go back and look at that Euro Japani. We might get a trade on there now. Right, you can see it's indecision. Time's it now, 3:30. That's the UK. So we're kind of looking for this market to give us something, aren't we? Can we do here? We need to wait. Let's just have a look at the lower levels. See what you can see the pressure in a 15-minute. Let's use the unbalanced volume, see what's going on in 5 minutes. We've can see it's indecision, and we've got more participation in the market, and the ATR starting to go up. So at the lower levels, we're swapping sides, we're buying and selling. So let's have a look what that looks like in the shape of candles. There we go. You can see candles going up and down. So this OBV9 that we've designed is really good. It tells you exactly what's happening in the market within the candle structure, the volume of buys, buying and selling, and are more participants coming into the market. Much better than the volume indicator. Volume's volume. You want to see what the volume is. Is volume is the volume going up with the buys? Is it coming off? The OBV9 will tell you that. You can get it on my website as well for PRT and for TradingView. And it's a really good tool. We shouldn't don't leave the house without it. You need to see where the market's moving before it does manifest itself in a completed candle. This is one of the very few indicators that's not a lagging indicator. It's a forward indicator. We've got some frackers. We've got some tools. We've got some here to say put the fractal tools on the FTSE. So what I'm going to do, I'm going to turn the tool on. There's a tool, and where have I? Right, I'll put it up live. Show you the. So these are the tools that we use. This is the dirty dozen that we use all the time. Fracker, donk. We're going to switch that on. And now we're going to energize it with a start button here. And then we're going to tell it what to do. The gear wheels are orange, will go green when the fractal bot is sitting there. So that's great. So we use these all the time. Where is my, and we track exactly all the trades that we do. I've got a sheet here. Whoops, that's it there. So this year so far, we're tracking these. These are available on the website as well. You can have these for PRT. This tool, these bots made 25% bank in 1 month in January. In February, they made 17.212, and in March, so far, we made 10.8. We cancelled this trade, and what I'm going to do now is into my group. I'm just going to copy this. I will put this in, paste data. It's for the 14th today. So anyone in the room can put this information in. I'm going to copy that, and I'll put it into the bot room now. I'll show you the bot room. So this is, we use Slack. These are just all the indications and everything that tell people what we're doing with trades and the like. There's the news I post every day, the AI news for traders, so they can use everything. And the bot room, the dirty dozen. So it was a dirty dozen. I'm going to post that in now. Bonk. So that tells people to get your bot ready to rock and roll and ready to actually get moving and trade. And I'm just going to post that in there just to keep a track of it. And we're on our way again. So we're waiting for that market to trade. So we're forecasting roughly, based on where we are at the moment, a 250% bank return, an average of 21% per month return. Personal thoughts, must be absolutely mad not to use these tools. They're robot tools. Very quickly show you what the FTSE one was. Version 4 derivative. I've gone very, very quickly just to show you. It's where's the FTSE? There we are. Modified FTSE, just to show you the code. It's a fractal engine, and it avoids trading American Open. It does automatic calculations for your bank, and it readjusts your balance all the time to make sure you're either risking 1 or 2% or whatever you want to do. It has a dynamic break-even triggers and buffers. It has stop-to-entry function as well. It has profit-taking reversals. And basically, you set the bot running like we've done here. And that bot was now sat there. And if it sees the opportunity, it will just go and trade it for me. It's got 1 way to get in and 3 ways to get out, all risk managed. And as you can see from March, we've never lost a trade yet. Never lost a trade in 2 weeks using these tools. Very, very good. Anyway, stop rattling on about that. This is a screener that tells me maybe I should be putting the bot on. So on here, it's saying put the bot on for the US 500. So maybe I should be putting the US 500 bot on a fracker. Have I got a US 500 one? That's version 5, version 4. US 500, yes, I'm going to put that on now. So I don't know, it's not in the code, I don't think. So we will modify this and we will put this in a 5 minutes. It says 5 minutes, just double check on the code. It says here 5 minute chart, so 5 minute chart, prepare for automatic trading. It runs into my swap sheet here, and then I'll say, yes, get on and do it, please. So I'll put the trade on activated, key wheels. There we are. So effectively, I could now walk away and have the fractal tools, the robots to go and trade this market for me. It says Wall Street as well. Don't want to put too much at risk. We're already at 0.5% risk as it is, and we're waiting for this market to fall over and to trade the market there. Hi, Egypt. How are you doing? Are you in Switzerland still? Are you back in Blighty? Right, okay. So these are just all the different, we have all sorts of bots that we can use. So if we look up for instance, we talked about, I went through this 15-minute bar guide, 4 hour, 1 hour, 15 minutes. There is one there that automatically tells me which is the perfect candidate to trade. And you saw how fast that actually worked. And this is the perfect storm for a 15-minute bar reversal. The market's pulled up and it's ready to go. Just to double check the bot's doing what it's supposed to do. we're under the 4 hour 200 EMA. We're under the 1 hour 200 EMA. You can see quite quickly here that we've got opportunities to trade down into the 15 minute. Market's pulled up on the 5th. Whoops, let's get this back. Market's pulled up to the 15 minute. And what we're looking for here is a 15 minute bar. Turn those frackers off. That's another strategy that we could use. But there is an indication here. So if you are trading this, what you'll actually see with this fracker here is at the 5 minute, this will be all pulled up all the way up here. Or it should be. Let's have a look. There we are. It's pulled up all the way up here. So we're getting from 5 minutes to 4 hours. The ball pulled back as hard as it will go for the arrow to go as long as possible. In other words, for our trade to really take flight and to smack it down. If you'd not waited for the perfect storm, which is the perfect storm is not only 15, 1 and 5, it's 5, 1, 15, 1 hour and 4 hour. It doesn't get any better than that. If you can't take that trade, then you shouldn't be trading. So that trade here, so that's a personal view. When you talk about, when you see programs like taking the shot, and someone says it doesn't get any better than that. This is one of those for trading. It doesn't get any better than that. So that would be the trade. There would be spread, there's 2, so 3 pips above here. So you're looking at roughly 25 pips. And you'd be going back down into here, which would be an easy 1-to-1 at 32 pips. That would be, but we're not trading that just at the moment. I don't want to flick around trading loads. Just want to show you some of these tools. They're really, really good. There's a perfect storm going long, a perfect short, perfect storm going long. So we've got the opposite is true, of course, here, euro going long. That's the absolute spitting image opposite of going long to the next big bang. Euro Swissy as well. The Euro Swiss one there as well. Going long. You can see quite obviously it's going long. We've got pullbacks, markets dipping back. Quite interesting spot silver, a dip back to go along. These are the targets that we were going for yesterday and day before. We've hit our targets already, and it's blown way beyond there. So really, these tools, some people have called them unfair because we get a massive advantage using them. But from my point of view, trading should be about using technology, find the trades. It's your job as a trader then to decide the strategy, which we have, a few of them, on which one to apply. It might be a 15-minute bar, it might be a 15-minute fractal, it might be a 5-minute fractal. Depends what you want to actually use. It may be a simple support and resistance dipping back to the 200 EMA. They all worked. They're all consistent trades. And this is now telling you we are undercooked again, ready to rock and roll, to go along again. Silver preference is gold, and gold is the same down here. It's telling us we're ready to do something with gold. Just quickly look at the alerts again. Triggered US 500 long. That's coming right up to an area that we want to trade. So remember that. I'm going to come back to that. We'll have a quick dip into gold on the 15-minute. Nothing yet, but it looks like the market is stopping here. You can look at gold. Look at even with these pullbacks, the on balance over an hour is fantastic. And you can see now the market's been coming down. We've got a bit of 5-minute action. 10 minutes starting to break. Manifest itself into an indecision candle or a green candles in the 5 minutes. You can just sit, not quite on the 15-minute. Let's flick into the 5. It's telling me on the 5-minute that the market is moving. And there you have it. Fit the green candle. Great indicator. Now we're just looking for a 15-minute bar on here. So let's go. We've got an alert. Let's go back onto the US 500 and let's see. This is coming up towards my perfect area that I would like to trade. Just wind ourselves back a little bit. I'm just looking at the reason I'm looking over here, looking over there here, whichever it is on the screen. It's because I've got other charts under the screen. So I'm keeping an eye on multiple markets at once. And we're just being patient. Because when this comes off, I think we can look forward to between 2 and 4% without a bother to add to our bag. So let's just get that helicopter view again. Remind ourselves of why we're waiting. Remind ourselves about the Michigan consumer sentiment. Everything's pretty bad for the dollar. People are buying into the dollar. Why they're buying into the dollar, getting a bit of value, I have no idea at the moment. But everyone will be trying to find a bottom. Try to find a bottom. People will be making money, but the market is clearly down. At the moment, the price action is clearly up, but we're looking for this market to fall away. Now, one thing we do want to look at when this market is coming down here on a 4-hour, what we're looking for here out of this channel, if we can see a 30-minute bar, body and wick, that's the full body and the wick, trading outside of this declining oblique, and then the break of that, then we can get rid of that channel. It means the channel's done. Price action has been confirmed. The market's happy to keep trading outside of that. So that's another tip. Write that down. So if the market is happy about that, then the chances of that breaking out and coming back down are reducing the probability of your trade. So let's go into the 30 minutes and have a little look at that. Have we got a body and wick outside of that? It looks like we have. We've got a full body here and a break of that wick. So the market is comfortable that that channel is no longer valid. We can get rid of that channel. It's no longer valid. So that movement is an issue for us now. But if it comes back down under the C ball, it isn't, and we will take it to the cleaners. What we're looking at now is support and resistance. The oblique resistance line has gone, and what we're looking for now is our next level that we want to reverse from. If the 2-day high, this is a new spike, so ignore this spike. If we break out of the 2-day high, then it might be game over for this week for shorting. And what will have happened is we'll have lost no money, but we won't have made any on the S&P. But I'm not a favour of trading against the trend, not in the slightest. There's too many opportunities in the market to do that. That we open every morning at 5 to 8 in the morning. I'm just thinking, is it worth doing a live session for the guys in Australia and in Northern Europe to do a morning session as well on YouTube? That might be useful, because don't mention the fractals. They're obviously too powerful. Yeah, I've had an issue. Well, we're streaming live on YouTube, so I'm not going to mention what I mentioned this morning. It appears that YouTube don't like my fractals. I don't know why, because they're very, very good. They work exceptionally well. If you've not seen any of my fractal videos, please go and have a look at them. It will change the way you trade. It will. Share. Well, it's also, I was going to share the screen, but it sets up the volume as well, so it'll echo everything. But if you go onto my channel and go under fractal trading, please try it, even with wooden dollars, and then come back to me and tell me it doesn't work. We constantly make really good money every single day. Well, I don't know. I'll ask the room. If you make money out of fractals, if you're in my room, please say yes or no in the comments. For people who are for people who are non-believers in fractal trading, it is revolutionary. It's my fractal design, not Bill Williams. So you'd have to look at the video and find out how my fractals work. They are they just work. Right. So let's cheers, Rog, Andy. So they are exceptionally good. Right. Let's zoom into a time frame that we generally use. Sure do. So that's Paul, isn't it? Yeah. Thank you from Ireland. So we're absolutely overstretched, overcooked here on the S&P. And what we want, we could be quite lazy here and put an order in here. Now we're so far up into the marketplace now, down to the close is just from here now, just putting in support, just putting 0.5% trading it, 96 pips. We would only need a stop, and what would we need? What would we need to stop? Even putting the stop up here out the way.
Alert triggered.
56 pips here. I'm not saying you're guaranteed money because you're not. Cheers. You're welcome.
Alert triggered.
If I can spell it correctly.
Alert triggered.
There's our alerts going off again. We're ready to go. So you could start feeding in a trade now on here because we're coming right up to some levels here. In fact, I'm going to start feeding in now, guys. We're going to start feeding in now, and yeah, I am going to use 1%. We're going to start feeding in now, and we're going to be targeting. Let's just have a look at the target. We're going to be targeting the close at least. So 96 pip target. This is for the rest of the day. And our ATR doesn't need to be. Let's get into the muck and bullets and have a little look at what's going on. So there's two things you can use. Here we can use a 5-minute bar under the 9 EMA, or we need a feed in above R3. So let's measure from where we are now to R3. We could get away with 52 pips, and that's what we'll do. 52 pips for nearly 2% return. And I'm just going to go in here now. Press the button now. So if you want to go in before me, go in before me if you want. I'm not bothered about front runs or anything like that. We're just going to smash the button now. So we're looking for nearly 2% there, and then we're looking for 2.5% under here. And this market's going to roll over around these levels. So what we can do to add to this, if you want to really get sporty on this, we could wait for a 5. If you haven't traded already, you can wait for a 5-minute bar, closing under the 9 EMA, and give it a whack, if that's a technical term. Or wait for a 15-minute bar reversal, because don't forget, we are very negative still. Only the 15 minutes says differently. But we're going to double up on the 15-minute under here. Under Camarilla breakout long, on the last exhaustive run, we're going to come all the way down here, and we're going to give it some, if that's the right word. And I'm going to move this now to the front run of the close. So we're near enough 2% direct trade here, and we've got 2% here. So we've got potential of 4% for just being patient for 1 hour. I think everyone would trade if you could get 4%. So what is the green line used as a dynamic support? Yes, Sean, here it is, yeah. It's a dynamic. This, if you mean this line here, this is a 200 EMA. The reason if the market was long, then it would be support, but the market's short. So what we're looking for is to get all our ducks in line with the 15-minute guide. I'm trying to use a 15-minute guide where I can here, just to show people on YouTube, not my trading room, because guys in the trading room know all this. It's motherhood and apple pie. But if you're not in my trading room, then it'll be a little bit alien to you. So I'm trying to show you what these lines mean. If you're referring to the red line up here and the green lines down here, we have a system, and the system is on a 1 hour basis. We use red and green. Red and green is the resistance lines, red, support lines, which are green. And when we go into 4 hour, those support lines just turn a mustard color. So we haven't got any written in there, but what we would do here is we'd pick 3 points. One, so 1, 2, 3 points. You will pick that point here, click that resistance line up, that resistance line, and that one, that's more or less it there, 3. And that becomes a 4 hour resistance line right by R3, which is a very powerful resistance, very powerful resistance. And it would take some moving today to break that out. It would take a flipping miracle to break that out today. But the market is coming off, and where it's going to come off, I'm not sure. I think it's going to come off roughly at these levels. I would like to have come up just a wee bit more. This is where it started to be tasty, and that's where it's just throw the kitchen sink at it on a 2-day high, and we come somewhere in the middle. So we are coming off a little bit.
Alert triggered.
And Gareth, 200 EMA, our bots running. The bots aren't scanners. The bots
Alert triggered.
are trading robots. So that's what the bots are. We have bots that
Alert triggered.
bots that scan, and we have bots that trade. If you become, or one of to explain, can I explain? These bots.
Alert triggered.
A pictorial representation. Where are they? They're on the website. These, I think, yeah, definitely. I think, yeah. Right, yeah, here we are. So if I pull this across on the website, some of the tools. These are the cash pivots that we're using, fractal indicators. There we are. The Dirty Dozen bots. So these Dirty Dozen, I've got anything down here that tells you about it. Yeah, so these are the bots. The results for 2024, they were making 9 to 16% per month. At the moment, these Dirty Dozen bots, there was a dozen, but well, I'm going to change it because it's not dozen anymore. I've made a few more, and if you're in my room, if you're a Dirty Dozen trader, then you get these free as well for the year. And I think there's now 16 of these now that we can use. So rather than doing 9 to 6%, they're averaging 20. They're at the average in roughly 21. So we made improvements on last year, and we've got screeners and core bots and master core engines. I'll just get rid of that. And the master core engines are here. This is one of the bots. This is a tool to tell you when to put the tool on, if that makes any sense. And then these are all the things to say, switch the tool on. We're going to get ready to actually trade. And then once you turn these, this is a scanner to tell you which ones to trade. And then you switch them on, and it goes into your system tray here. And then they sit here with gears working, not on your PC, on the server. So you can, once you set these up, you can then switch your machine off and walk away. And when the markets are ready, it will automatically trade it for you. So these are all these ones here are different types of scanners. We've got 57 different scanners. I've just put some core ones up at the moment to trade the markets. 4 hour pullback, I call them a dipper. So markets pull back, and now you can go and trade long or short, short trades, wherever it might be. So yeah, but we're trading rather than going through showing you the tools and the like. Has anyone used the bots to take a prop firm challenge? Well, there is no prop firm challenges in PRT. what I am doing is slowly converting these robots into Python. So you could run these bots in Python on a piece of software called Trade Locker.
Triggered.
And if you look at Trade Locker, it's on Trading View, but it's Python backend, and you can run the bots on there. So next month, not next month. Well, I don't know. I prefer PRT, so I use PRT and then transfer the trades onto prop firms manually when they trigger, and it's easy enough to do.
Triggered.
I'm not going to spend my time and effort converting everything as a priority to put prop firm trading on, because people get greedy on prop firms, and the passive challenges, they get greedy, they put too much leverage on and they blow it all up. Or if they get bots, they just think the bot's going to work all the time. And what usually happens is people think they're prima donna traders, and what happens is they just lose all the money. I don't encourage people to lose money. I encourage
Triggered.
people to learn how to trade. Let's just go and have a look at those alerts that are going off again. So gold, right? So we need to go and look at gold. It's
Triggered.
gold is getting ready to go. I would like to stay on until this flipping thing comes in, but it looks like it. We're please 15-minute bar, guys. I'm not going to stay on too much longer because I've got guests. Right, we're starting to put in a 15-minute bar here. It's starting. The grind has started, and this is something I would please implore you to trade this using the techniques I've explained, because the outcome is you'll make some money, and I'll give you my address, and you can send a bottle of whiskey. Andy's smiling there. I can even put the drum down that I like, but yeah, there we go. We do the YouTube just for fun. It's good. Right. So some of the techniques that we said, just to go back over it, it's a 5-minute fractal or a 15-minute bar. 15-minute bar starting to set up, 3 seconds to go, and a new 15-minute bar will start. Hopefully, it's a flat bottom one. Looking what's happened. On balance volume starting to come through. So this might be a great 15-minute bar. If you are very aggressive and very bullish on gold, then you might want to use a 5-minute fracker. 5-minute fracker. There we go. So one thing I will do on here, I will do this, and I'm going to use 2% on this, is I'm going to set this up. We're going to wait for the 15-minute bar, but I am super bullish on this. So what I'm going to do is set a trade on a break of the second fractal bar here and above the 200 EMAs. So I'm going to set a trade at 29.87, and I'm going to have a stop of 8.5, 9.5. So I'm going to have a 9.5 stop at 2%. Just check 9.5 can be fitted in there. I'm not sure whether it can. Yeah, well, I am sure it can be, yes. Sorry. So we're going to go for a trade here. There. So putting that in now, anyway. Thunk. And we're going to see if we can get a nice one-to-one. In fact, we probably can. Oh, yes, that's 9.5. Don't know what I am doing here. Sorry. 9.5. And we'll just stick that up in the 10 here. We should get that, no problem. Should get more.
Steve, just looking at the time and the FTSE, should we sort of expect the FTSE to start pulling off little bits, look for a tick down somewhere around?
If that Dow stops, then yes, we'll go into the FTSE in a minute, and have a look. Yeah, you're absolutely right. The 4:05 5-minute bar reversal. We want to have a little look at that. Just bear with me 1 minute for the guys in the room. You know, I trade this on futures, so and I use some little different rules for myself. So bear with me. I'm just going to do a futures gold trade. Bear with me 1 minute. Futures gold. That's spot futures. So I'm using April contracts. And right, so we're in. So yeah, we can go and have a look. So right, so very quickly on here, sometimes we're going to sell off into the close on the FTSE, and yeah. So 9 point, we're looking at a 2% trade, just over 2% to do a fractal break up here, or a 15-minute bar. You could probably say whichever comes first, we can take. We've got 11 minutes left yet on here. I'm just going to go and have a look at some of the trades that we're looking at. So we've got the US 500, which is slightly in the money. The Dow, I don't know, because according to IG, it's shut, the market. Don't know why. There's obviously an error in the data there. No, it's still saying it's shut. It's still saying I'm 1,200 pips wrong to the negative. Don't know what the heck's happened with. I think it's a glitch in IG. So let's have a look at the I'm just going to keep on here. I'm just going to pull up the FTSE, and I'm going to put the FTSE on a 5-minute. And if it starts looking a bit tasty, then we'll look to trade the FTSE. But at the moment, it's heading for the hills at the moment still. I'm just keeping an eye on the FTSE on 5-minute bars, and it's nothing at the moment. So we are in 9 minutes time. We're looking to go along on a 15-minute bar or the 5-minute fractal. When you, as I mentioned, markets do repeat themselves. There's a previous frac here, very close to the structure. So the way the market's behaving at the moment, buying and selling, the combination of buying and selling is producing fractals. It's very much in the same territory here, isn't it? Very much in the same territory. That the fractal 5-minute and the fractal 15 are very much where things have happened before. So if we get a, oh, the gas on my chair's going down. I'm slowly going out of the screen. Right. Let's only a very small pimple to the bottom, but nice bar. It's a shame it's not above the 9 EMA, but yeah, I'm going to stay on until this pans out rather than leave, because I don't want to be a YouTuber that always shows retrospect, picks things that are retrospective. It's real trading room, and we trade every day. Oh, right. I don't do it. Right. One thing I will say, if you are watching this still and you're not in the room, if you're interested in being part of my trading room and community, drop me an email and we can have a chat, see if it's a fit for you, see if you want to be a consistent trader, learn our strategies, trade with us every day. We trade at least 5 times a week, sometimes 8 times a week with system trades, etc. Always live. And when we're not live, we put signals into the room as well. So if you're interested in wanting to learn to trade in our community and be part of it, drop me a line. Stephen.Paxton, HARKO. It's in every single video description we've got on YouTube. So if you're interested, go and find it out. Drop me a line, and I'll give you a little look through to see what we do, to see if it's of interest to you. If you want to be a consistent trader and make money, then probably would be. If you're interested in just dipping in and dipping out and trying to make a few crumbs here and there, it's probably not for you. Right, stop waffling, Steve. Let's wait for this 7 minutes to go on this bar. Euro Japan is a bit annoying as well. It's taking a while to work. What will significantly help gold go up is people seeing after the Michigan consumer sentiment numbers, if they see the Dow and the S&P falling away, it'll go running straight back to gold, and I'll just push gold up, and we'll be sitting already waiting. So that could be quite nice as well. So we can get the Dow and the S&P coming down, and we'll get gold coming up as well. Happy days. So we could make 2 to 4% going down on the indices, and a nice 2% going the other direction. That would take us into double digits for the day, the percentage returns. Not bad. Hasn't happened yet. Officially, we're only for 5.28% up. But that's for the day, not for the week or the month. It's not too bad. So 5 minutes to go. It looks like we might get the 5-minute fracker first and trading above the 9 EMA before we get that 15-minute bar. And there we are. Whack. We've been tagged in. So great. Let's make sure all the orders have gone in. Yeah. Perfect. Cool. Right, let's go and have a look at the S&P 500. S&P 500 not really doing a lot yet. So we're robot's gone in. You can see there, robot. So the robot's gone in automatically now, and it's thinking it's a good trade as well. So happy days. If you're not in and the robot's gone in, then you should be in, because it's got an 87% hit rate, that bot. So what we can, this is what we actually do live. I'll type that in, because we switched the bot on live, didn't we? And I'll just, I didn't post it in the room. Oh, sorry, guys. Don't post them all in the room. And obviously I forgot, because we are live. So we'll just type, flipping heck. Sorry about that. Never mind. I forgot to show people the room as well, didn't I? I'd be no good as a flipping salesman. So the stops on here are 13 pips. So we're live in the room. We've gone in at 56, 1.5.39. So I'm just going to put that down as data, so automatically, but puts the information in. We've not got the FTSE hasn't gone in yet, and we're on our way, and that will record a win or a loss. What I think I will do is just give people a heads up in the room, in the bot room, just in case they missed it. Come on, come on, come on. I'm going to post that in the room. US US 500 on, and we'll just screenshot that, post it in the room. Bang. So if you're interested in the Dirty Dozen, get the Dirty Dozen. You'll then become part of my trading community in the Dirty Dozen room. Oh, hasn't shown, has it? Right, okay, well, let's try it again. Delete. Yes, delete the file. Let's see if I can put it on again after, don't know why it's not going on, but I'll just screen capture that. And then we'll put that on there. And then in. So if you're in a Dirty Dozen room, what we do is, why isn't it working? Oh, there we are in there. So we put all these signals in, and when I make a new bot, we put the new bots in here. So the Dirty Dozen is 30. It's now 17. No, it's 15 or 17 bots. We keep a track of everything we're doing. I have meetings every single week. If you're in the room, you can have one-to-ones with me on the Dirty Dozen, how to manage a Dirty Dozen, how to be a portfolio manager, and you'd be part of this community. You certainly won't be left on your own, and you can see all the different things that we've got in here. So anyone, stop talking about that now. That's the Dirty Dozen room. So bots are on. Right. Okay. So quick flick onto the Dow. Quick flick onto the Dow. Right into the area now. So we got stopped out. You notice there's only 2 trades there now. We're stopped out for 0.25%. This is the way our risk management. But what they want to do now is we've hit our area here. What I'm going to look for here on the Dow now is a 5-minute, and I'm going to add. When we break that 9 EMA confirmed, we're going to add, and we're going to put a stop above here. So we've lost quarter, we're in a quarter, and we're going to stick 1% on here for this market going down, or 0.75%. No, just 1% be fine. So we're at 15 seconds to go, and we're going to do a break of the bottom of here, and that's going to take us to 115 and 116 pips. I'm not prepared to, with the accounts that we're trading, not prepared to do 1%. We'll do 0.5% because it's 120 pip stop, and it's a direct break of here. So we're going to take that now, direct break, it's done. And we are going to head off down to, what should we head off down to? We could be very ambitious and head off all the way, we'll put some alerts and head off all the way down to this close, 500 pips. So we're looking at collect 900 pips out of this. We have lost 0.25%, and we've got 0.75% in here now on the way down, and this will be a massive multi-bagger if we get this one. That will be really, really tasty trade. But it's been patient, and it's waiting for the market. So the FTSE could easily start to sell off now, but it's, I'm just looking at the FTSE now, it's not. I don't think I want to. The FTSE's just putting in a weak 5-minute bar. Do I want to trade it? We're at 16 minutes past already. Markets are coming down. We're in the money now on the Dow. We're in the money on the S&P. If you are not already in, then it's a 15-minute bar reversal coming on song here. So we are set up really to absolutely clear up in the markets. We didn't have visitors, I'd stay on. And actually record this live, making what could easily be 6% after waiting an hour. But it's all about patience, picking your points, picking your strategy, and then just executing it, but being very patient to pick your point. So now, there we are. There's have I got that picture? Have I got the I haven't got it, have I? I've deleted it. The guide. So the guide shows that is a decent bar. This is a perfect bar. 15-minute reversal. It doesn't get any better than that. The only way it gets any better than that if it was lower down here. But if you can't trade that, then maybe you can't trade. But perfect 15-minute bar, 2% bang for the day. That would be very nice indeed. Do we really need to load the FTSE up? I don't think we do. Really. We're looking at 2% plus on the Dow, 2% plus on the S&P, and 2% on gold. That's 6%. Euro Japani, is that something that we could trade? No, it's still on its way down. It's just not ready yet. But if you like the Euro Japani, it is a long trade, and you know, the night is young for trading the Euro Japani. You still could get 1% out of it. I've just turned the screen off for YouTube. So patience is the key. Is there any questions that anybody has got that I can answer before we go? Any queries on trading at all? No? Don't even know if there's anybody on at the moment. I haven't got my admin view up on YouTube. I'm just looking at the YouTube YouTube comments. So I don't know how many people are even watching, to be fair. So we'll see that when we switch off. But we're doing okay. Ah, okay, Roger. Great. Have a great weekend as well. Thank you. Looks like it stopped raining, but it's still as heck here at the moment. But we've got Prosecco on ice. That's nice. I've got a dry throat, so just waiting for that. Let's see if it'd be fantastic if you all can make some money this afternoon. That will be brilliant. And one thing, if you could come back to this live video when it's finished and make some comments, I'd be really interested to know if you made some money, because I just want you to make some money. If you've followed things, or have you got any queries or any comments, please put them in the comments against the live video, and I'll do my best to answer them. And we're going to make a regular session out of this trading. So we're looking for the Dow to fall over eventually, looking at for the US 500 to do the same. If you're not already in 15-minute bar reversals, and then we're looking for gold to finish the day off and give us a few more rupees in the pocket, so it's just moving off nicely. So I'll just put thanks, guys. A great weekend. I've got no one typing this for me, so great. So I'm going to go, guys, and I will see you next Friday for all the guys in my room, bright-eyed and bushy-tailed. I'll see you all at 10 to 8 in the trading room, and I'll see you, Andy, in the trading room here with me. We'll be trading live on here. So
absolutely. I'll be heading up on Sunday.
Yeah, no worries. All right, guys. See you then. Bye-bye.
Cheers, Steve.
Bye-bye.